Hi, welcome back to Brilliant Achievers channel again. Before you watch the video, remember to click like and subscribe my video. Thanks a lot. Let's start on the topic today. The Fed screws and recession is coming ahead. I know this is not a very good topic to talk about, but we still have to anticipate that recession is coming. So Fed just raised a 75 basis point in June, and there's another 75 basis point coming in July, most likely. So this 75 basis point is the most aggressive since 1994 among the 30 years. Fed already said that they are not going to stop increasing the rate until inflation comes down. Unless the war and the supply of food and energy is going to stabilize, the inflation is not going to stop. Actually, the Fed is going to increase the rate higher and higher. So this is just a starting point of a liquidity crisis. What can go wrong here? The market is very sensitive to interest rate, be it your housing loan, a personal loan, or your business loan. Businesses has been borrowing cheap money. If let's say that business cannot get a cheap rate to roll over and to fund their business, they are going to have a lot of trouble to do the expansion coming ahead years. With a lower revenue coming ahead, it's likely that they cannot even pay back with their current debt servicing. If let's say businesses can't pay back their loans, means they might have to cut their workers and the cost of spending right now. This year alone, Singapore local banks has been increasing more than 3 times the interest rate. So we can see how aggressive the interest rate increase right now. When the layoff is going to start, it's going to be massive. And if the layoff is going to be massive, recession will start coming. Once the worker is laid off, the payment of loan, be it a personal loan or a mortgage loan, this will be hugely impacted the economy. Even there's no big recession is coming ahead, the interest rate increase will reduce the consumption and hence will slow the growth of the economy. We have seen many developing countries have a really high household debt versus the GDP. This will look bad if the interest rate increase in the coming years. Countries like US, Japan, and China has one of the highest household debt to GDP. With expected lower growth for this country and lower consumption, this will impact the whole world. The first urgent thing is to start reviewing your loans. If your housing loan is about to recontract, review and refinance it with a lower rate right now. Second, pay back your personal loan as fast as possible to reduce your leverage. Keep your job and upskill. Save as much cash as possible, maybe somewhere between 9 to 12 months ahead, just in case there's a recession coming. Have a plan of what to do in case that you have a job loss or you have a pay cut. So you can start to devise a plan. So be safe and invest well. All the best. If you think that my video have helped you, please click like and subscribe my video. Thanks a lot.